Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to take a look at 5 stocks to keep on your watch list for this upcoming trading week. And if you're new to the channel, I'm the Gen Z Investor, and every single Sunday, we discuss all the upcoming major events taking place over the next trading week. And these include earnings reports, investor day presentations, product launches, or any major event that could impact the underlying company's share price. And we preview all the events every Sunday to give you a heads up on what you should keep your eye on over the next few days and which stocks may be at a great opportunity to buy this week. And for each of the 5 companies, we're going to take a look at their current performance, some financial numbers, and the analyst expectations for their future growth. And all 5 stocks we're discussing today come from different sectors of the market. We have some big tech names, we also have some consumer brands, and we have a mixture between some growth companies as well as some dividend payers as well. So a lot of variety in this week's episode, and as Q1 earnings season come to an end, a lot more presentations rather than just earnings numbers. And before we take a look at that first stock, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe for the daily videos, and of course today, the first stock we're going to go over for this week's episode is ticker SHOP, which is Shopify. The company currently trades for $1,224 per share, and they've grown by 52% over the trailing 12 months. And this is one of the leaders of the e-commerce sector, and they now sit with a market cap at $152 billion. And Shopify is in a very interesting position because from a high point of $1,474 back in mid-February 2021, they have now fallen by 17% to get back to this current level. So a nice decline, bringing them back to the $1,200 range if you want to buy in to this leading e-commerce company. And why they're included in this week's episode is because they are hosting their annual meeting of shareholders on May 26th. So a very important event. They're going to give outlook on the upcoming years, share their new products, their new innovations, and share some new financials in the future expected growth of the company for many years to come. And Shopify has exploded in popularity over the past 5 years as the entire e-commerce world has grown dramatically. And the pandemic has only benefited Shopify in many ways, as tons of retailers and almost every organization in North America is now focusing on their digital presence, which is where Shopify is the leader in the space. And the company is also making new headlines, partnering with Google to make their program more attractive, and now Shopify users will have their products shown across maps, images, search, and even YouTube in a much more easy fashion. So this is a really big benefit for the Shopify platform, and any company who can power with Google, I believe, will see great benefits. And if we take a look, from the 2020 US retail e-commerce sales number, Shopify controlled 8.6% of the market. Of course, it's not the company itself, it's the underlying businesses using a Shopify store, which just shows the power of this platform. It came in second, just behind Amazon, who controls 39% of the market, and came in above Walmart, eBay, and even Apple. So right now, a ton of companies are using the Shopify platform to grow their digital presence and create online stores. And if we take a look at the company's financials very briefly, they have been growing revenue at an astounding rate, growing 86% throughout the full fiscal year of 2020 to just under $3 billion. And we can see every single year, total revenue continues to explode. And why I like Shopify a lot is because they have a subscription model for their total revenue. And we can see here, around a quarter of their total revenue in 2020 came from their subscription services. And if we take a look, they have a CAGR of 45% on their monthly recurring revenue. So this is the monthly revenue coming from their subscription-based models. And over the past 5 years, it's growing at a CAGR of 45%. So for anyone who subscribed to the channel, you understand I love subscription-based companies. They provide generating revenue every single month or every quarter consistently, and a lot of these companies grow their payments every single year. So it's just such a steady flow of cash into the business. It's absolutely phenomenal. And right now, with an average monthly recurring revenue stream of $90 million, that means the company's bringing in just over $1 billion a year in recurring revenue, which is absolutely phenomenal. And going forward, analysts are expecting Shopify to continue to grow at a very fast rate, and the average growth estimates are showing over 27% annual growth for the next 5 years. And currently, the company is trading below their 52-week expectation of $14.84, and they are considered a buy, coming in with a 2.3 at this current level. So one of the strongest names in the e-commerce sector. As consumers, we understand that e-commerce is here to stay. It's only going to grow over the long term, and I believe consumers will transition to buying more and more of their products and services online rather than in person for many years down the road. So Shopify, definitely an interesting player to keep an eye on this week. They're hosting their 2021 annual meeting of shareholders on May 26th. They've just partnered with Google. They've seen some amazing financial numbers, and I'm really looking forward to tuning in, watching this event, and hearing what the company's executives have planned for the future of the business. So this was the first stock worth keeping an eye on this week, and now if we transition into company number 2, it's going to be ticker NVDA, which is Nvidia. They currently trade for just below $600 per share. And one thing I want to mention, of course, with Shopify and Nvidia, the high share prices may not be attainable to purchase a full share for some investors. Just remember, with fractional trading, you can buy into any of these companies with as little as $1. So if you want to buy into a stock after you do your own research, make sure you put in whatever you're comfortable with. You don't have to buy a full share if you don't have the funds. And if we take a look at Nvidia specifically, they're up just over 70% for the trailing 12 months, and they trade with a market cap at $373 billion, and the company does have a minimal dividend yield of 0.11%, but because it's so tiny, I barely consider it when discussing this company. So they're included in this week's episode because the company is sharing their Q1 earnings on May 26th. We can see we have an expectation of total revenue coming in for the quarter at $5.4 billion, with earnings per share of $3.28. And over the past 90 days, one thing to know is analysts are getting very bullish on this report, and we've seen 29 upward revisions in EPS expectations and 0 downgrades. So for the past 3 months, analysts have only been bumping up what they're predicting for Nvidia's numbers. And we can see over the past 4 quarters, they have beaten expectations by a significant amount each and every time, and they're forecasting some incredible growth for the next 4 quarters as well. 82% year-over-year expansion coming as an expectation for Q1 in their fiscal 2022 financial year. So as a whole, we have some big predictions for Nvidia coming forward right now. And if we take a look at their 2021 numbers, they had a record-breaking year. And we can see total revenue climbed 53% over the past fiscal year to $16.7 billion. Their gross margin improved to 65+%. They had nice high operating income of $6.8 billion. And what's impressive is their earnings per share came in at $10, growing by 73% over the prior year's number. So right now, Nvidia is on a hot streak. They're performing extremely well with record-breaking financials. And going forward, similar to Shopify, analysts are forecasting some major expansion with an average estimated growth rate of 22% per year for the next 5 years going forward. And right now, the company does sit below their 52-week expectation of $669 per share, and they are considered a buy, coming in with a 2. So the second company worth taking a look at this week is Nvidia. They report their latest earnings. I'm really looking forward to these numbers as well. They've been crushing expectations in the past. They had a record-breaking 2021 fiscal year, and going forward, this growth of the semiconductor space is only expected to continue, and with all the shortages and the increased demand, I think Nvidia will have another very strong quarter, and definitely worth taking a look at over the next few days. And now we're going to transition away from the tech sector and into one of the largest consumer brands in the world for stock number 3, which is Costco. Ticker COST or COST currently trades for $380 per share, and they've grown by 26% over the past year. And Costco is a company we see all throughout North America, one of the strongest retailers in the world, and they also have locations spread out across Europe, Asia, and South America as well. And this player has been dominant in the market over the long term, and we can see for the past 5 years, their share price has grown by 166%, and over the past decade, they are up 356% overall, so with a lot of long-term share price appreciation coming from this major retailer. Currently, they have a market cap at $168 billion and a dividend yield of 0.83%. And we're discussing them in this week's episode because they do share their latest earnings this week as well, coming in on May 27th after market close. We have a revenue estimate of $43.81 billion, with earnings per share to come in at $2.28, with a little bit of mixed reviews coming from analysts, 15 bump ups and 4 downgrades. And if we take a look, for the past 4 quarters, they have 3 beats and 1 miss, and we're actually forecasting a slight decline in year-over-year EPS, so really looking forward to see Costco beat these numbers and come in with a strong quarter. And because of the shift in the pandemic, people are now going back to retail locations. I think Shopify is going to get a boost for all the consumers who are forced to stay at home due to the pandemic, now having the ability to go in person to shop at a store that's so attractive like Costco. I think their in-person traffic is going to grow as well. And if we take a look at their income statement, over the longer term, when most big retailers are stagnant or declining in revenue, Costco continues to expand. And we can see every single year, their total top line is growing at a dramatic rate to over $178 billion in the trailing 12 months. So every single year, the company's expanding their size, growing with more locations, more members, and their total top line is growing exponentially as well. And if we take a look at their net income, every single year like clockwork, it continues to grow, which is a great sign to see. And one thing to know with Costco is that in the past year, they generated $3.5 billion in membership revenue. And because of that revenue stream, that's where a lot of their profits come in. The actual business of selling goods in Costco comes at a low margin, which is what makes the company very attractive and brings in those consumers. And if we take a look at the net income of $4.3 billion, 3.5 of that can pretty much be contributed to the actual membership fees. So the membership you pay to Costco is really what's contributing to their total bottom line. And right now, the company still continues to grow rapidly, which is a great sign. And we will discuss their dividend. The yield is on the low end of only 0.83%, but they have a very low and extremely sustainable payout ratio of only 31% of their net income. And currently, they have a dividend CAGR of 11.86% for the past 5 years. And what's special about Costco is that in the past 8 years, they've issued 4 special dividends. And a special dividend is a one-time payment well above the actual quarterly payment as a special award to their shareholders. And why a company does this is to bring back excess capital, pay down their investors without having to raise their quarterly dividend by a dramatic rate. So Costco pays out around 80 cents per quarter, but they did a special dividend not too long ago worth around $8. So a major special dividend occurs pretty much once every 2 years from this company. And if we take a look down the road, analysts are forecasting around 8 to 9% annual share price appreciation, and currently the stock trades just below the 12-month expectation, but it is still considered a buy, coming in at a 2.1. So though Costco has seen a big run-up as of late, I think the company is still one of the strongest retail brands to own in a portfolio. I own them myself, and definitely worth doing some research into, and take a look at the numbers they share for their latest quarter. So this was stock number 3, and now as we jump into stock number 4 in this week's episode, we're jumping back into the tech sector with ticker AMD, which is Advanced Micro Devices, who currently trades for $77 per share and is up by 41% over the trailing 12 months. The company has a market cap right around $93.7 billion, and this is another big semiconductor player. And I personally believe that AMD is one of the strongest companies in that industry. And if we take a look though, from late in 2020 and early 2021, they traded at a high of around $97 per share. But they have now fallen by 20+%, or at least $20 per share back down to this current level, and I think AMD, if they see any downward momentum going forward, may become a very attractive company to own. And if we take a look, why they're included in this week's episode is because they're a keynote speaker at JP Morgan's 49th Annual Global Technology, Media, and Communications Conference. They are one of the keynote speakers, and the company's CEO. She'll be presenting, sharing the outlook of AMD, the outlook of the whole semiconductor industry, and provide support for the growth happening on a longer term scale of 5, 10, and 15 years. And these presentations will bring a lot of confidence to investors, and this may actually spike an upward trend in the share price after the event takes place, or vice versa. If investors don't like what she's going to say, then it may spin into a downward momentum, bringing the share price back to a more attractive level. So very interesting week up ahead. Good or bad, I do believe in AMD long term. And although I'm not a growth stock investor, I don't own any shares in this company, they are one of the names that if I were to start buying growth companies would be at the top of my list personally. I like this company, I like their brand, and I really do urge investors to take some time, speak with a qualified professional, do some of your own research into AMD, and let me know in the comments what you think of the company. And if we take a look at their revenue statement, we can see total revenue every single year continues to grow, and it's absolutely exploded as of late to over $11.4 billion in the trailing 12 months, which is absolutely phenomenal. And if we take a look at their bottom line, the company reached a nice level of profitability as well over the past year to over $2.8 billion in net income. And another reason why I personally like this company is because they're in a very healthy financial position with total current assets of just under $7.2 billion versus total current liabilities of only $2.8 billion. So a current ratio above 2, very sustainable. And if we take a look at the long-term debt, it comes in at a very minimal number, around $700 million of total long-term liabilities, which is absolutely nothing for such a large-scale company. And what's great to know is that they've actually done a great job of paying down a lot of their long-term debt over the past few years. So if we take a look, current assets of $7.2 billion can pay off all the company's debt at only $3.5 billion, and the current ratio or the long-term ratio is still above 2, which is absolutely phenomenal. And their total equity has absolutely exploded as of late, and as the company becomes more profitable, grows their total income statement, their balance sheet improves, I think this company will provide their shareholders with a lot of value and a record high $6.4 billion of equity sitting on the balance sheet right now. So overall, one of the strongest positions and strongest financial companies in the semiconductor space, and AMD on a 20% decline right before an upcoming conference for the JP Morgan Tech event may definitely be worth taking a look at over this upcoming week. So that was stock number 4 in this episode, another big name I believe is worth keeping your eye on for the next few days. And now finally, we're going to move on into the 5th and final company for this episode, and that's ticker YUM, which is Yum Brands. They currently trade for $119 per share. They've grown 36% over the past 12 months, and they have a market cap at $35.6 billion with a dividend yield of 1.67%. And if you're unaware, this is one of the largest restaurant and fast food chain companies in the United States. And if we take a look, they're the owner of Taco Bell, KFC, and Pizza Hut. So they currently have over 50,000 restaurants in more than 150 countries and territories around the world. And their 4 main brands are, of course, KFC, Pizza Hut, and Taco Bell. So I think right away, if you want exposure into the restaurant/fast food sector, this is a company to take a look at. And they're included in this week's episode because they're hosting a virtual KFC Investor Day on May 25th. So I think the company is going to give outlook for the entire fast food industry, provide some support for the growth and expansion going forward. And right now, as the pandemic comes to an end, as individuals have more discretionary income to go to restaurants, which was pretty much shut down throughout the pandemic, I think even the fast food retailers who still remained operational throughout the pandemic, but did see a reduction in demand, are going to see a great benefit as the overall economy begins to fully reopen. And if we take a look, they also announced in early May a $2 billion share buyback program for the next 12 to 24 months. And that's phenomenal. Currently, the company's worth only $35.6 billion. So that means they're going to buy back more than 5% of their outstanding shares if they stay around this current value. So currently, that's a lot of value being returned to investors in Yum Brands, and every share you own is going to become more valuable. And currently, if we take a look, they have a yield of 1.67%. Their payout ratio is only at 47% overall, so a lot of room to continue to pay out that dividend while reinvesting and paying down debt. Plus, their 5-year dividend CAGR is at 8.83%. So really looking forward to seeing what Yum Brands has to present at their virtual investor day for KFC. I'm sure they're also going to touch upon their other restaurant chains as a whole as well, and I will be tuning in to seeing what this restaurant chain has to say. Because the entire restaurant industry pretty much gets overlooked in the public markets, and I think there's not a lot of companies other than the big name McDonald's that gets any hype or any love from the financial markets. And if we take a look, over the past 5 years, they've grown by 50%, and over the past decade, by 112% overall. So they're still averaging around 10% annual expansion, which is not bad in the slowing fast food sector. And if we take a look going forward, analysts are forecasting over 14% annual expansion for the next 5 years, and the company is currently considered between a buy and hold, coming in at a 2.5 and trades right around their 52-week expectation of $122. So Yum Brands was the fifth and final company we are going to discuss in this episode, one of the leaders in the fast food sector with over 50,000 locations in 150 countries, which is absolutely phenomenal. So there's stock number 5, and now as we wrap up the video, I want to thank you for watching to the end. I'm the Gen Z Investor. Every single day we talk about the stock market, going over different stocks you can buy and sell, any major market news, and of course we discuss all the big headlines from any big name company that trades on the public market. So I want to thank you for watching this video to the end. Please hit that like button, subscribe to the channel and join the community, leave me a comment down below, and I hope you enjoyed the 5 names we're taking a look at, keeping on your watch list for the upcoming trading week. Thanks for watching, and I will see you in tomorrow's video.